When the world's fourth largest company suddenly drops $32 billion in cash to buy a cybersecurity firm most people have never heard of, it's time to pay attention. This week, Google made one of the biggest tech acquisitions of 2025, paying an astounding $32 billion for Wiz, a cybersecurity company that didn't even exist 5 years ago. What's up, everyone? Today, I'm breaking down what Google's massive cybersecurity purchase means for investors like us, and 3 cybersecurity stocks that are now positioned for potential explosive growth in the coming months. When Google spends $32 billion on something, it's like when your rich friend suddenly buys a yacht. You don't need to understand all the details, you just know something significant is happening. By the end of this video, you'll understand exactly why cybersecurity has become one of the most important growth sectors in the market, which 3 stocks are the best positioned to benefit from this trend, and how to potentially add them to your portfolio. So let's dive in. First, let's understand why Google would spend $32 billion on a cybersecurity company, more than they've spent on any acquisition since Motorola in 2012. The simple answer: as our world becomes increasingly digital, cybersecurity isn't just important, it's essential. Consider these statistics. Cyber attacks increased 38% worldwide in 2024. The average cost of a data breach reached $4.9 million. 43% of attacks now target small and medium businesses. But there's a deeper trend happening. The rise of AI is creating both new threats and new defense mechanisms. As companies integrate AI into their operations, they're exposing themselves to new vulnerabilities that traditional security measures can't address. Google's acquisition sends a powerful market signal. When a tech giant makes a move this big, it's not just about one company. It's about recognizing a fundamental shift in the industry. It's like when your health-conscious friend suddenly buys a home gym. You just don't think, oh, they like that specific treadmill. You realize they're betting big on fitness becoming a permanent part of their lifestyle. From an investment perspective, Google's move suggests 2 important things. Cybersecurity valuations might be at the attractive levels compared to future growth potential. Major tech companies see cybersecurity as critical infrastructure, not optional spending. Let's dive into the first cybersecurity stock that's positioned to benefit from this trend: CrowdStrike, ticker CRWD. CrowdStrike provides cloud-based security solutions that protect endpoints, cloud workloads, identities, and data. Their Falcon platform uses AI and machine learning to detect and prevent threats in real time. Many of you might remember CrowdStrike from the Delta Airlines incident last year, when a software update caused a global system outage. The stock took a significant hit, but the company quickly resolved the issue and implemented new safeguards. Despite strong fundamentals, CrowdStrike is still trading well below its all-time highs. The Wall Street analysts setting price targets suggesting up to 133% upside potential. What's particularly interesting is the institutional buying activity. MarketDash's institutional tracker shows major funds have been accumulating shares over the past month, a strong vote of confidence from smart money investors. The Delta incident was like that one embarrassing photo from college that keeps showing up in your social media memories. Everyone else has moved on, but the internet never forgets. Now it seems like Wall Street is finally ready to swipe left on that memory too. With the stock trading at just 78% of its 52% week highs, despite accelerating revenue growth, CrowdStrike presents a compelling risk-reward profile for investors looking to capitalize on the cybersecurity trend. The second stock on our watch list is Oracle, ticker ORCL. While not a pure-play cybersecurity company, Oracle has been aggressively expanding its security offerings, particularly within its cloud infrastructure. Their security services protect databases, applications, and cloud environments from sophisticated threats. One of the most compelling signals for Oracle right now is the 10.1% decrease in short interest over the past month. This suggests bearish investors are closing their positions as the bullish case for Oracle strengthens. Oracle currently trades at a premium price to book value compared to the rest of the computer sector. While this might seem like a negative, it actually mirrors the pattern we saw with semiconductor company SMC before it delivered nearly triple-digit returns. Oracle has been around so long that some investors think of it as the tech equivalent of a historic landmark. Interesting to look at, but not exciting to own. But sometimes the most reliable buildings are the ones that have already weathered a few storms. As companies accelerate their digital transformation efforts, Oracle's combination of cloud infrastructure and integrated security solutions positions them to capture increased spending in both areas. Our third pick is Palo Alto Networks, ticker PANW, a company that's caught the attention of some notably unsuccessful investors. In December 2024, Congresswoman Nancy Pelosi reported purchasing between $1 to $5 million worth of Palo Alto Networks stock. While we can't know her exact reasoning, congressional trades often outperform the market significantly. Palo Alto Networks provides advanced firewall protection, cloud security, and threat detection services to enterprises worldwide. They've successfully transitioned from hardware to a cloud and subscription model, creating more predictable revenue streams. Institutional investors have been increasing their positions as well, with funds adding shares ahead of what many analysts believe could be an acceleration in enterprise cybersecurity spending. When both Congress members and Wall Street banks are buying the same stock, it's like seeing both the wolves and the sheep heading in the same direction. It might be worth following just to see where they're going. With strong price action, institutional support, congressional interest, and sector tailwinds from Google's acquisitions, Palo Alto Networks offers investors a momentum play in the cybersecurity space. So how should you approach these cybersecurity stocks as a 9-to-5 worker without unlimited time to research and monitor investments? Consider a balanced approach based on your risk tolerance. Conservative approach, focus primarily on Palo Alto Networks, about 60%, smaller positions in Oracle, about 30%, and CrowdStrike, 10%. The advantages are going to be lower volatility with established players. The growth-focused approach, larger positions in CrowdStrike, about 50%, balanced positions in Palo Alto Networks, about 30%, and Oracle 20%. Your advantage, more upside potential, but higher volatility. Whatever approach you choose, position sizing is crucial. I'd recommend limiting your total cybersecurity exposure to 5 to 15% of your portfolio, depending on your risk tolerance and time horizon. Remember, building a portfolio is like planning a dinner party. You want a good mix of reliable favorites and exciting new dishes. Too much of either and your guest or your future self might end up disappointed. Google's $32 billion bet on cybersecurity isn't just a one-time event. It's a signal that the entire industry is reaching an inflection point. For investors who position themselves correctly now, the potential rewards could be substantial. To help you track developments in this fast-moving sector, I've partnered with MarketDash to offer a special discount on their premium plan. Use code FREEMONTH for 30 days free, giving you access to all the tracking and analysis tools I've shown in this video. If you found this information valuable, please hit that like button and subscribe for more content on emerging investment opportunities. Drop a comment below letting me know which of these cybersecurity stocks interest you the most. Thank you for watching, and I'll see you in the next one.